May profits be upon you. Welcome to another weekly Forex forecast. We are going to go nuts on two videos. Uh, we're going to analyze 20 markets, this whole list. All right, maybe not Bitcoin, but we're going to analyze this whole list, starting with the equity markets. Then we're going to go to FX markets, starting with the US dollar index. All right. We got oil, we got metals, we got all kind of good stuff coming. So let's get started. All right. Again, it's going to be two videos. This will be the first one, and I'll do part two right after. Okay. Now let's look at the S&P. All right, the S&P futures. You can see on the monthly time frame that we've peaked here, swing high, swing low, and then a higher high was made, and we're still in that phase, all right, where price expanded above this swing high. And while we're at it, let's take a look at what the COT report as of last Friday's release says. It says that the hedge funds and institutional players are mostly uh, are mostly in long positions, right? But they are closing longs. Last week they closed some minus 13,000, right? But they are close. They're pretty close with shorts, and they are adding shorts big time, plus 74,000, 74.5. So that's a big deal, saying that they are adding on to shorts, and you can you can see this. This is the current monthly candle, and you see that with the elections and all, it went all the way up past the high of the previous month, right? And then it comes back down, trading below that the high of this previous month candle, all right? The trading range. If it closes like this, or even goes any further, we can start to think that the market has taken a bearish turn, and that next month, which is in what, a little less than 12 days, right? Uh, we can start to see that using next candle theory, that it's probably going to be a bearish start to that month. The low of this month will be vulnerable. All right, should the market close below the full trading range of the previous month. Let's look at the weekly. Looking kind of bearish on the monthly. On the weekly, what we can see is this this election candle. All right, closed high. All right, open low, high close. Right, the very next candle. The very next weekly candle was last week, and you can see how it took a bearish turn at the top. All right, this is the wick that was produced that we just saw. Now, is price going to continue bullish or bearish? This doesn't look healthy if you're thinking bullish. All right, it doesn't look healthy because of how far back it came. If it would have came like right around here, and wick there, and then form the body and all, then we would say, hey, we have a bullish weekly fair value gap, and that we'll probably see higher prices from there. That's not the case here, because it came back and touched this line here. Came back below that high. It negated, it invalidated the formation of a bullish fair value gap. So that's not something that we can see, is that price using to go higher from. That's a bearish indication, is it not? All right. Also, this is currently respecting the well, that's on a different time frame. Let me just get going ahead with this analysis. That you can see that this bearish candle that was overcome here created an area of fair value, or an order block, right? And you can see how price left there, and so far we have 1, 2, 3, 4, 4 attempts to come to get lower, but it never got past that uh, opposing candle, that bearish candle, as opposed to these bullish candles. You understand? Price comes back to it and then shoots back off. This is turning out to be pretty resilient. All right, but here comes price. If there's no bullish fair value gaps, there's very little that we can point to on the weekly to say that, oh, well, price will turn around here or there. No. So we take a closer look here on the daily, and you can see that we have a bullish daily fair value gap. All right. And price is inside of that. It naturally, from this point, I would be bullish. All right. And I'm looking for price to go higher from here. All right. But what this makes easy is making a decision whether we're going to take a bullish or bearish approach, because what you can see is price pushed up high and came back to equilibrium, right, to the 50% of this trading range, top to bottom. All right, we need to see price close below or close above on a 4-hour or daily basis. So right now, what you can see is there's a bearish fair value gap here. All right, this is on the daily, and there's another one potentially to form here. That's not there yet, but there's potential for it. You see how price extended itself deep into this fair value gap. So, and will price come all the way back up here and then come back down? Probably not, but it's showing intent. All right, and when it comes this deep, something to watch. Now it hit these two candles that were overcome by this bullish expansion. So I'm looking at this as an area of fair value. Prices stopped there. It's halted there, stalled there. Let's see what happens with the next candle forming. The Monday candle is going to give us a lot of clues. Now, can we see something in this candle on the 4-hour that'll tell us, hey, price is probably going to go even lower? Well, what I'm looking for are bearish fair value gaps, and I don't have one. I don't have one to speak of in this. This actually, I do right there. All right, we got one to speak of. All right, and we already have this one below it. All right, could price use this for lower prices? This is all you have to watch. That's why I said it's kind of easy. On the 4-hour, what you want to see is price either break this high and then forming bullish fair value gaps along the way on the 4-hour and using that to get to higher prices. Let me make this black. Or all right, that's going with the trend now. Or if there has been a shift in the market, I want to see price use this, create bearish fair value gaps along the way here, a 4-hour bearish fair value gap, and then use that to seek lower prices. That's what I want to see. Watch this fair value gap on the 4-hour. Now, if we go back to the daily, if price closes below this low, then we're probably heading here. I'm not looking at this bullish fair value gap as a place for price to turn around. I am not. All right, because it's so low, and it's in the discount of this range of price. I'm paying more attention to what's bringing price down. If it's forming bearish fair value gaps along the way, those are the ones I'm going to give uh, more weight to than this older bullish fair value gap at the bottom of this trading range. All right, so that's where I'm at. I also want to point out as it's a draw on liquidity right here. We got relative equal lows on ES on the S&P to draw price down. I'm sorry, to draw price down. Okay, so that is something to be wary of. If we get that close up here, I'm looking for that low right here to become the draw on liquidity. So it bears watching. Let's see what happens here. The first thing I want to see is the previous weekly low taken out. That's what I want to see. All right. If price goes below that previous weekly low with a strong close, there's a good chance price is heading towards this low at the end of the week, by the end of the week, these relative equal lows. Okay. NQ is very similar. All right. But you see, it's weaker. Look how long that is, that candle is, that bearish candle is compared to S&P. See? This one, I, I'm more bearish. I'm more bearish on, obviously. The previous weekly low was over here. All right. I already have it marked. And what I want to see is what we're looking for on the daily. I mean, you see how it almost took out the daily fair value gap here. All right. The previous weekly low is this swing point here. And you'll notice that it's not as equal on, as far as relative equal low, it's not as equal here as it is on the S&P, but these will be targets after this one is hit. These are not too far behind. This could be seen as a low resistance liquidity run. You understand? Let me see if I can get that. Nope, I can't. So I'm looking at that. Definitely looking at these. Let me see if I can get that. Low resistance liquidity run. There you go. All right. So, if can we see something on the 4 hour? Well, the same deal. We have a bearish fair value gap. Prices coming into that bearish fair value gap. If this bearish fair value gap on the 4 hour fails, if it fails, I'm looking for price to form bullish fair value gaps along the way and price to pull back into it to seek higher prices. If the bearish fair value gap holds, I'm looking for price to come down and take out the previous weekly low, and I want to see if there's bearish fair value gaps along the way so that price can go back up and then down for further declines. Okay. This one's different. The Dow is different than the others. You see how high it is? And I want you to see, this is the weekly time frame. You see this weekly fair value gap? You see how price is sitting on that, on top, all right? Not deep inside. All right, this is looking more bullish. This is looking more bullish, and it's just stronger. You see how it responded here when the fair value area of fair value was created. It held. We saw daylight. It came back to it, and then fired off. This looks this looks like this weekly fair value gap could hold and send price higher. All right, it could use that weekly fair value gap to go higher. All right. If we go to the daily, this is the daily fair value gap here. See it? Price has come into it. We're right at the top of this area of fair value, right? And price could easily just give us our setup on a lower time frame, and it could send price higher. The overlapping weekly fair value gap over this daily fair value gap is pretty compelling to me. So we'll see what this one does, but I'm more bullish here, and I would be looking for bullish setups around the current levels. Let's take a look at gold. Oh, I didn't mention to you on NQ. if I can get it. Yeah, they're adding. This is, this doesn't help. They're adding to both their shorts and long. The institutional players and the guys for the Dow, they are closing their shorts and adding to longs. They're adding to longs as of last week, Friday. So, I mean, take from that for what you will. They're looking to go higher in the Dow. All right, if we look at gold, let's look at the monthly. Wow, I'm not making a lot of headway on this. If we go to, you can see the monthly. We're sitting in a monthly bullish fair value gap. That price has almost gotten through. I'm not going to keep it on the screen, but I want you to see where, look where price close is. Well, it didn't close yet for the month, but they still have 11 days. It's almost eaten through it. That's why I don't have it on there. It looks like it will fail. All right, but this is a bearish engulfer, and it is pretty bearish, right? Institutions are closing their long positions. They are primarily their majority long on gold, and they are closing them by 20,000 this week. I think it was something a similar number last week. So they are taking profit. So we may see further declines. All right. If we go to the weekly, do we have a weekly fair value gap? Yeah. Well, look at this. This is a weekly fair value gap, right? But it's a breakaway gap. Breakaway gap is when price closes real strong below the trading range of the previous candle. This one, the price doesn't really have a reason to come all the way back up here and then expect price to go lower. No, that's not what you're going to expect. All right, so it's a breakaway. All right, now where are we? We are in an older bullish weekly fair value gap. We're on a weekly time frame now, and prices so far respecting it, coming into this little area of fair value, a little what do you call it? An order block, a bullish order block, and we could see a price go higher here, but I think it'll be short term. We may see that weekly fair value gap form once this candle is finished for the week. If we go to the daily, if we're going to look at price being bullish or bearish, we have to acknowledge that this was a break of structure here. All right. And when you see a break of structure, you look for price to pull back for the, because it's made a lower low, and you look for the lower high, and then the lower low, the lower high, right? And you see that we have a bearish fair value gap that formed a nice breakaway gap. Price doesn't have any reason to come back up here. All right, we've seen that a bearish fair value gap here on the daily. All right, price could very well use that bearish fair value gap and come back and make further gains, further declines down to that previous weekly low from the previous week, and this will be the initial draw on liquidity. So that's what I'm looking at. If this fair value gap fails and price closes above it and creates those bullish fair value gaps, I'm looking for price to continue higher, quite possibly up to this fair value gap here, which happens to be intersected by the breaker here. All right, because we do have a breaker here, right? Wouldn't you say? All right, we can go up. We can go up here to there. Wouldn't you say that? Boom, boom. We come back up inside it. There's a fair value gap in there as well, so it becomes a daily unicorn, and we could see prices decline from here. That's if it goes past this fair value gap. So it makes it easy. We just got to watch that fair value gap on the daily. If it holds, we'll see it come down to the. We'll look for our entry function here on the once it hits that fair value gap, and go to the lower time frames and catch a good trade.